With the week nearing its end, we note that Canada's employment data for August has still to be released. On a monetary level, we highlight the ECB's interest rate decision on Thursday in regards to financial releases. We make a start on Monday with Norway's and the Czech Republic CPI rates, both being for August. On Tuesday, we begin with the UK's employment data, followed by Norway's GDP rate for July, and finish the day with Germany's CEF indicators for September. On Wednesday, we make a start with Japan's corporate goods price rate for August, followed by the UK's preliminary GDP rate and manufacturing output rate, both being for the month of July. Later on, we note the Eurozone's industrial production rate for July and the US CPI data for August. On Thursday, we begin with Japan's machinery orders rate for July, followed by Australia's employment data and Sweden's CPI rates for August, the weekly initial jobless claims figure, final PPI rates and retail being for August. On Friday, we note China's industrial output rate for August, followed by Canada's manufacturing sales for July, the US production rate for August, and the preliminary University of Michigan sentiment figures for September. The USD is about to end the week in the greens, marking its 8th consecutive winning streak, as the dollar's ascent appears to be unstoppable. On a fundamental level, we highlight that the Pentagon announced on Wednesday a new security package for Ukraine, including the controversial armor-piercing munitions, which could draw some condemnation from China. Should there be further indications towards increased tensions between the two nations, the market sentiment may decline, causing the US dollar some safe haven inflows. On a monetary level, we highlight the speeches of Fed policymakers providing mixed signals as to the intentions of the bank on whether it will be hiking rates or not in its next meeting. On a macroeconomic level, we highlight the US employment data providing mixed data, and furthermore, the Fed's beige book, which was indicative of a reduction in activity and implied that hiring growth peaked during the summer. However, the negative sentiment appears to have been mitigated following the ISM manufacturing and non-manufacturing PMI figures, which were better than expected. Next big dollar is expected to be the release of the US CPI rates for August next week. The pound seems about to end the week weaker against the US dollar, the euro, and remains rather stable against the JPY. On a monetary level, we highlight the speech by BOE Governor Bailey, who stated that we are much nearer now to the top of the cycle, and I'm not therefore saying we are at the top of the cycle because we've got a meeting to come, implying that the bank may be reaching its terminal rate, and as such, as was mentioned last week, an easing of BOE's hawkishness in the coming week may weigh on the pound, as the case for the bank's future rate hikes appears to have weakened. On a macroeconomic level, we note the UK Halifax house prices rate for August, which came in lower than expected, implying a reduction in demand for housing in the UK, which could be attributed to the burden placed on consumers during the current high interest rates period, which may have discouraged new first home buyers. Lastly, we note the increase of major financial releases next week, and as such, we may see the pound being more influenced by data once again. JPY is about to end the week relatively unchanged against the euro and the GBP, and weaker than the dollar. On a fundamental level, we note that according to various media sources, the Japanese Prime Minister is due to reshuffle his cabinet next week in an attempt to drum up support for the government before a possible snap election. On a monetary level, we note the speech of BOJ Nakagawa, whose comments appear to have been perceived as dovish, calling for the bank to maintain its ultra-loose monetary policy course, which in turn could weigh on the JPY. On a macroeconomic level, we note Japan's revised GDP rate for Q2, which came in lower than expected during today's early Asian session, implying that the bank's current monetary policy appears to fail to have a positive impact on the country's economy, and as such may enhance the case for the continuance of the dovish monetary policy. Therefore, in conclusion, we may see the JPY weakening as we head into next week, unless BOJ and/or the Japanese government come to the yen's rescue, or the Japanese currency gains some safe haven inflows. The euro is about to end the week in the reds against the US dollar, yet slightly stronger against the pound and the JPY. On a fundamental level, we highlight the statement made by the ECB Executive Board member Frank Elderson, who stated that the tragedy is upon us and it has started to unfold, when referring to the effects of climate change. Should the ECB decide to aggressively push its climate change agenda, It could impact the manufacturing capabilities of the Eurozone at a time when the bloc needs to project strong manufacturing capabilities. On the monetary front, we note the speech by ECB President Lagarde in which he avoided providing an indication about whether or not the ECB will raise or hold interest rates in their monetary policy meeting next Thursday. Furthermore, ECB Nagel stated on Tuesday that it would be wrong to speculate that an interest rate peak will soon be followed by cuts, implying that the bank may maintain its current level of high interest rates for a prolonged period of time. Should the bank decide to remain on pause, as is widely anticipated by market analysts, it could weaken the euro, as it may signal that the bank has reached the terminal rate. Yet we would not be surprised if the bank opts for a 25 basis points rate hike, given the dynamics within the ECB, a scenario that may take the markets by surprise and support the common currency. On a macroeconomic level, deceleration of Eurozone's preliminary GDP rates for Q2 was indicative of a reduction in economic activity. The lower than expected preliminary GDP rates for Q2 may be a sign that the current monetary policy is at sufficiently restricted levels and tend to feed words that the bank may be going overboard. AUDs are about to end the week weaker than the dollar. On a fundamental level, we note that LNG workers at the Chevron plants are reported to have begun partial strikes, intensifying supply chain fears for LNG in Europe. On a deeper fundamental level, we highlight the substantial attempt by China to recover its economy, which may be bearing some fruit following the better than expected imports rate for August, despite another contraction being reported, and may support the Aussie, given the Australian economy's heavy dependence on exports to China. The market worries may intensify should US-China relationships deteriorate, given also the recent restriction of the use of iPhones imposed by the Chinese government. On a monetary level, we note the comments made by outgoing Governor Lowe, who stated that if inflation became sticky, it would require tighter monetary policy, implying that the bank, following his absence, may still need to raise rates if needed. However, during this week's interest rate decision, the bank remained on hold, which appears to have disappointed traders, as it also appears to have retreated to lower ground following the announcement. On a macroeconomic level, we note Australia's real GDP rate for Q2, which was released on Wednesday, which came in better than expected, and therefore the better than expected GDP rates could potentially indicate that the Australian economy is more resilient than what the market analysts give it credit for. The loonie is on track to finish for an 8th week in a row lower than the dollar. On a fundamental level, CAD traders may keep a close eye on oil prices, which, following the announcement by Saudi Arabia and Russia that they would be extending their oil production cuts up until the end of the year, saw oil prices print yearly highs nearing the $90 per barrel figure. On the other hand, market worries for the demand outlook of the commodity, given China's slow recovery, may weaken oil prices. Should oil prices continue to be on the rise, we may see the CAD benefiting, given that Canada is a major oil-producing economy. On a monetary level, we note that BOC remained on hold during their interest rate decision on Wednesday, as was widely expected by market analysts. On a macroeconomic level, we note that Canada's GDP rates for Q2 came in lower than expected, implying that the Canadian economy may not be able to sustain the currently high interest rate levels for much longer, with the possibility for the economy to enter a recession slightly increasing. We also note that at the time of this report, the Canadian employment data has yet to be released, and should it come in better than expected, we might see some strength by the loonie, as it could aid to the narrative stated by the bank yesterday. In the coming week, we expect volatility in the FX market to continue to increase, given the high volume of financial releases that are due next week. We also note that in the equities markets, ARM Limited is widely anticipated to launch its IPO next week on the 14th of September, and has been widely touted as the biggest IPO of the year. Furthermore, in the equities market, we note the drop of Apple's share price due to the restrictions set on iPhone usage in China, and note that a possible escalation of tensions in the US-China relationships may have an adverse effect on US equities. As for gold's price, we note that it appears to have ended its 2-week winning streak and is on track to end the week lower. On a more fundamental level, we highlight that the G20 summit is due to take place over the weekend, with its starting date on Thursday. During the meeting, it would be interesting to see if the US is going to be able to advance its relationships with emerging economies, given the absence of Russian President Putin and Chinese leader Xi. In the sidelines, India may officially announce its intentions to be renamed as Bharat, following the widespread reporting of the current president Draupadi Murmu sending G20 invites in which she's being referred to as the president of Bharat. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.
Hello, welcome to another video. Today we'll be looking at range, which is the difference between a market's highest and lowest price in a given period. Basically, range is a term used to describe when price is trading between a defined high and low. It moves within these two boundaries without breaking from them. Range is mostly used as an indicator of volatility. If market is trading with a wide range, then the risk associated with trading it will tend to be higher. Range can also be used to identify support and resistance levels. Basically, a trading range is characterized by both a support price and a resistance price. The price tends to fluctuate between support and resistance. If a financial instrument is in a well-established trading range, traders can buy when the price approaches its support and sell when it reaches the resistance level. To calculate a range, you take the highest price point that's reached in the period you're analyzing and subtract the lowest price point. For example, if GBP USD hit a high of 1.2090 and a low of 1.2010 on a given trading day, its range for that day would be 1.2090 minus 1.2010 equals 90 pips. Thank you for watching.
So hey guys, welcome to IronFX webinar series, and today we'll be going through Fibonacci crash course. Okay, so if you guys have any questions while I'm going through, just feel free to type it in the chat box below and I'll answer your questions straight away. All right, so let's begin. Okay, my name is Woon Hong and I'm an investment analyst at Everest Fortune Trading Group. Okay, so we have a collaboration with IronFX, and this is for the webinar series. Okay, and this is the disclaimer as usual. Remember that everything in this video is educational in nature and nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade, okay? All right, so the agenda for today, we have quite a few things to cover through, especially mainly focusing on Fibonacci retracement, extensions, projections, and expansions. Okay, so firstly, we'll be going through Fibonacci retracement essentials. Secondly, we'll be going through ideal market structure, significant swings following market trends. Thirdly, we'll be going through the different Fibonacci retracement levels. And second last, we'll be going through Fibonacci extensions, projections, and expansions. And lastly, the confluence levels that we should watch out for, and how can we combine these Fibonacci levels to show that there is Fibo confluence in here. Okay, so all right, so firstly, Fibo retracement essentials. So the checklist is very simple. We have 4 essential steps. Firstly will be, is the market structure clear enough? Look for big zigzags in the market. And secondly, identifying the recent trend. Prices going down or up. So is it a downtrend or is it an uptrend? Thirdly, to identify recent major swing lows and recent major swing highs. And the last one will be connecting the two extreme points, highest to lowest, which is a downtrend, and lowest to highest for uptrends. So what is the ideal market structure? So these are insignificant swings right here. These swing lows and swing highs are too insignificant, and they are not good to use for the Fibonacci points, because these swing lows and swing highs are too narrow, too small, right? And you are not able to draw it correctly. Sorry, you may be able to draw it correctly, but these points, for example, you draw from this low to maybe this high, is not efficient at all because these peaks are too small, right? And this is the second example whereby there is these are insignificant swings because again these swings are too narrow and price movement is too small. Okay, so let me just adjust. All right, okay, let's move on. Okay, so here is a correct example of significant swings. We have clear moves up and down and with obvious peaks and troughs. So these are the peaks. The peaks are the highs right here, and the troughs are the swing lows right here. Okay, so we have a very clear market structure and movements. All right, so here is another example of significant swings. So I've drawn out the peaks and troughs to point out exactly how clear it should be, right? You can see right here, it looks like a triangle, right? So you can see right here, these are the swing highs, these are the swing lows, swing highs, swing lows, swing highs, and swing lows. Okay. Next, following market structure. So you can see right here, we have a very clear downward movement. Oh, sorry. Okay, then secondly, the Fibonacci retracement trend line follows the price movement. So if you're in a downtrend, right, you're drawing from the top to bottom. So these fibs tend to work better on higher time frames. For example, your H1 and H4 time frames, because there are less noise. Less noise meaning there are lesser candlesticks, right, in the market. So your H4s are the ones that are more accurate. And we always say that higher time frame is always king, right? Because it's more reliable in a sense. Okay. So this is what is wrong, in a sense that Fibonacci retracements should not cut through two large areas of the market structure. You can see right here, these lows connecting to these highs, you are cutting through this whole area right here, this whole down movement over here. So you should connect from these lows to these highs and not this one instead. Okay, you should not deviate too much from price movement. Okay, excuse me. Okay, so we have a clear market structure right here. We can see the highs, which are this the peak right here, and then the lows will be this area right here, the peaks, the troughs, the peaks, and the troughs. Okay, so you can see very clear triangular looking patterns. So this is what we call unclear market structure, in a sense that price is ranging in this area right here, and there are too many narrow and small movements over here. And then suddenly we have a spike upwards and spike downwards. Okay, so these are irregular movements and it is unclear market structure, so you shouldn't trade pairs like this. So usually this only happens for like a exotic pairs such as maybe GBP, CAD, EUR, AUD, etc. Okay, so what are the different retracement levels? Okay, so we have, of course, in within the 100% and the 0%, we have our 23.6%, 38.2, 50, 61.8, 78.6. Okay, so oh, my screen is not showing. Oh, sorry, give me a, it should show. Oh, give me a second. Okay, is this better? Can you guys see my screen now? Okay, are you guys able to see my screen? Yes. Is visible now? Yes. Okay. So let me just go through again. Okay. So basically, this is the checklist. All right. Just now I mentioned, is the market structure clear? And then we should identify recent trend prices going down or up, and then recent major swing lows and recent major swing highs and swing lows. Okay, then we can connect the two extreme points, highest to lowest, which is a downtrend, and or lowest to highest, which is an uptrend. Okay, then ideal market structure. So these are insignificant swings because the movements are too narrow. Okay, you cannot see significant swings. All right, so these are all, this is another example of a insignificant swing, because you can see right here the movements are too small and we don't have a spike upwards or downwards. Okay, so these are significant swings, right? A long rally upwards and a long drop downwards. Okay, so these are significant swing highs and lows. So you can see here the triangular patterns, right? Significant swing highs, swing highs, swing highs, swing lows. Okay. Then we should follow market structure, clear downward movement. So from the point 1 to point 2, you draw from the top to bottom, and you can see that the fib retracement trend line follows the price movement. It tends to work better on higher time frames, for example, H1 onwards. Okay. All right, so this is something that is wrong in a sense that fib retracement should not cut through two large areas of the market structure. You can see right here, it cuts through this whole downward movement, right? So you shouldn't draw from this low to this high. If you want to draw it, you can draw it from this low to this high. Okay, because when you are drawing fibs, it should not deviate too much from price movement. Okay. Also, this is a very clear market structure. You can see the highs, the lows, the highs, the lows. Okay. So what is an unclear market structure? You can see for this market structure is very messy. And this is, like you can see right here, is ranging in an uptrend, but it's making very small movements, very narrow movements. And we can only see maybe this swing high right here, but this movement is too close in a sense that there isn't a proper price movement here. It's just price spiking up, maybe because of news. Okay, then you can see right here, very small movements over here. Okay, so what are the what are the different retracement levels? So the different fib retracement levels, all right, so 100% to 0%, So we can see that there is the 23.6, 38.2, 50, 61.8, 78.6. Okay, so your extremes are your expansion levels. So the negative 61.8, negative 27.2, and then we have your extension levels, 127.2 and 161.8 extension levels. Okay. So you can see right here, this is your range of fib retracements from 0 to 100%. Okay, you can see your positive fib retracements, which is greater than 100%. 127.2% is over here. And then the expansion levels are below the 0%. Okay. So what are Fibo extensions? Okay. So Fibo extensions are above the 100% level. All right. So what the two that are used would be 127.2 and 161.8%. All right. So you should always look for a Nike tick to find these very powerful setups. You can see a Nike tick right here. Okay. So once it goes past the 100% level, you should watch for reactions of the 127.2 and 161.8 in this GIF over here. Okay, starting point, you see ending point, Nike tick, right? All right, and then you are plotting, you can see you are plotting the fib retracement tool. All right, then price actually reacted off the 127.2 first, and then it broke past and reacted to the 161.8. So you can see, right, very nicely reacting there and then going downwards. Okay, so you can see price reacted twice actually, and then came down and broke past all the way back to our midpoint. All right, so fib extension levels. So this is example number 1. So you're drawing your starting point here and then your ending point here, right? And then price actually, see in the Nike tick over here, price actually reacted here at the 161.8 fib extension level, and then it reversed all the way down. Okay, so it's very important. Always look out for a V shape between point 1 and 2 and 3 when you are trying to use the 127 and 161.8 retracement levels. Okay, so this is example number 2. So example number 2, we can see right here, we are drawing this, we can see a peak over here, right? If you go down to maybe the lower time frame, okay, you can see this rejected wick over here. You can draw this 100% to your lows right here. And then we can see that price reacted off the 127.2% extension level, also because we have a major swing high over here. Okay, so price will always react. Just remember, price will always react to major key levels and then your retracement levels. Okay, so try to look out for your key levels first and then your retracement levels. Okay. All right, so just to zoom in, we can see right here that price reacted very nicely. Bodies all closing below the 127.2 extension level and then reversing downwards. Okay, then we can see right here, we are drawing from this low, right, to this high. And then we can see price actually broke through the 127.2 extension level and then came all the way down to the 161.8 extension level. So right here, you can see price reacted very nicely and is going to the upside right now. So the next one I'll be going through with you is expansions. Okay. So for expansions, Fibonacci expansions, right? So for Fibonacci expansions is less than the 0%. Okay, so the two expansion levels that we will take note of will be negative 27.2 and negative 61.8. So we should always look out for a flash zigzag when identifying these Fibo expansions. Okay, so one thing that we have to know is the clearer the movement of the zigzag, the better. And we ideally need to wait for prices to retrace at least 50% in 0.3. Okay, so at least 50%, right? Price coming down here, retracing 50%, and then before taking off in the other direction. So we are expecting a sell right here at the negative 27.2 expansion level. Okay, so the best situation would be that you are looking, let's say you enter a buy right here, and then you are buying all the way, looking for it to break here to go to the negative 27.2 expansion level, right? Then once price has very nice movement upwards, you can sell at the negative 27.2 expansion level. Okay, so we should watch out for the reaction of this level. You can see price tapped this negative 27.2 expansion level and then came all the way down. Okay, so the first example of the FIB expansion would be, so your starting point is here, okay, and your ending point is this swing low right here. Okay, so price actually retraced up to the 61.8% level. So that's the criteria. So remember, the criteria is to retrace at least 50%, right? So price retraced all the way to the 61.8% FIB level. And then what we're looking at is that price could come down to this negative 27.2 expansion level. Okay, so let's just see how it plays out. Okay, you can see right here, the price actually came down to this negative 27.2 expansion level and then bounced up really nicely from this area. Okay, there you can see that price usually comes back to the ending point, right? So your starting point, ending point, right? So it came back to this swing low support level, which because it was acting as a pullback resistance. Okay, so this is something that you can take note of. So maybe let's say you enter right here. Your first take profit could be at the ending point, and then if it breaks past, then your second take profit could be at the 23.6% FIB level right here. But since it really broke past and then reacted off here, this whole Fibonacci retracement will be taken out, and this level cannot be used. So you should identify the next key level instead. Okay. Right. You can see. Okay, so you can see right here. Right, take note of the shape of the flash. So make sure, right, zigzag here, right, and then price has didn't close above this high, so it retraced at least more than 78.6% of the FIB and then come down. Okay, so it broke past this low, so that's your second criteria. Broke past this low, then bouncing off this negative 27.2 expansion level. You can see right here, all the different weeks, price didn't even close below this negative 27.2 expansion level and flew up. Okay, so next, all right, so the fourth example. Okay, so in this GIF, take note of the shape outlined by the orange arrow. Okay, price retraces more than 50% of the Fibo trend line, and in this case, more than 100%, and reverses nicely off the negative 27.2 Fibo expansion level. Okay, so this is an exception whereby it actually retraced more than 100% of this Fibo trend line, came all the way back up, and reacted off this negative 27.2 expansion level. Okay. All right. So what are Fibo projections? Okay, so very simple. Fibo projection should not be confused with Fibo retracement. Okay, so because Fibo projection uses 3 points, while Fibo retracement uses 2 points. All right, so Fibo projection percentage use will only be 61.8, 78.6, 100, and that's the max. Because 127.2%, 161.8, and 200% are only 127.2 is weak, can only be used as a supporting argument, while the 161.8M 200% are more often used in Elliott waves and not such simple tools. Okay, you are usually looking for a flash zigzag, same thing in this type of Fibonacci retrace projections. All right, so you can see we have a 100% Fib projection right here. Price actually touch this area and then go up. So for Fib projections, you are taking the vertical distance from 0.1 to 0.2 and project it from 3 onwards. Okay, so 3 onwards, then here you're projecting it downwards. Okay. All right, so here's a simple example. You can see clearly the starting, the middle, right, and ending points follow the swing highs and lows of the price. Starting, middle, and ending. So this will be your start, your swing high, your swing low, your middle, and lastly, your last swing high will be your ending. So Fib trend line should follow price movement closely and should not deviate too much from the trend line itself. Okay. So you can see right here, starting, middle, and ending, right? So we project the Fibonacci as a extension right here. So if you're drawing from this swing high to this swing low and this swing high, right? You're projecting that price will come all the way down to this area. Okay, so the 78.6 Fib extension is a really strong level too. Okay, pro tip, always look out for big zigzags. Okay, the bigger the zigzag, the better in not necessarily have to be big, but it is more accurate in the sense that price will be more accurate. Okay, so for this one, we can see the price actually came down and touched this 78.6% Fib projection and then went all the way up. It is possible for you to trade this down move right before buying here, but it may be slightly riskier for those that are not too experienced because you may not know where the key levels are or like basic market structure, etc. So you should only enter a trade when you're confident and you know that this level is able to this level is the projected level that what's this Fibo projection is telling me. So I will enter right here. Okay. All right, so this is another example. So take note of this zigzag shape once again. So you can see this big, very, very big zigzag shape, right? So this time it is inverted, meaning that you're starting from the bottom to the top. And back to the bottom. Instead of top, bottom, top. This is bottom, top, and bottom. Okay, notice the clear movement in price structure, which our Fib projection trend line follows. We are projecting to reverse off the 100% Fib projection right here. And then let's see how it plays out, okay? So you can see right here, price actually reacted off the 100% Fib extension level and reverse all the way down. Okay, so when does a Fibo retracement become invalid? So one of the common scenarios of this is when price makes a lower low. So okay, lower low. And then assuming you are drawing a Fib retracement from the top to the bottom. Okay. If there are bars on the right that break your ending point, it becomes invalid. Okay, there are Fib retracements that are negative, which I mentioned previously, negative 27.2 and negative 61.8. And we will touch on this as they basically go beyond your endpoint, yet they are still valid. Okay, you can see right here in this picture, this price actually broke this low, right? So it shows that price is now, so this Fib cannot be used unless you are projecting a expansion level, right? But for expansion, because price didn't retrace back to 50%, then we cannot use the expansion. Okay, always remember to pick the lowest point with nothing on the end of your ending point. All right, so confluence levels. How can we combine your FIB levels? Okay, so multiple FIB retracement levels lining up together right here. And then you can see we have the negative 27.2 Fibo expansion level. So it's this movement down right here. And this could increase the probability of a bunch of FIB retracement levels working versus a single FIB retracement level working. So you can combine these FIB retracement levels and you have your FIB confluence levels. So that's why price actually bounced off the FIB confluence area when there were 3 confluences in this part. Okay. Right here, this is the same. Okay, the third one will be your 61.8% FIB projection and negative and 127.2 FIB extension. Okay, so you can see right here, you project from this high to this low to this high, and then you can project that price could come to this 61.8% FIB projection level. And then we also have the 127.2% FIB extension level. Okay. All right, so same thing, but this one is kind of inverted. Okay, so you can see right here that if you draw from this high to this low, so your 100% will be right here, because there is your your 100% FIB projection will be right here. And as for FIB extension level, here, this circle area. So your FIB extension level will be this negative 127.2% extension level. So while these two are working together, right, and this area right here, I will assume that there is a swing high on the left. That's why price actually make such a dump right here. Okay. All right, so we can see right here your negative 61.8% FIB expansion and 161.8% FIB extension. Okay, so negative here. And then negative, and then the 161.8% FIB extension, because you can see price actually broke past the negative 27.2 and then followed by the 127.2%. Okay, so right here we have our projection level, right? Top, bottom, and top. So this shows Fibo confluence and then negative 27.2% expansion and 127.2% FIB extension. All right, so trade management with Fibo confluence. So a stop loss beyond a key confluence area, price is attracted to such stop loss. Price is attracted to such strong areas of FIB confluence. So if your stop loss is right here, right, instead of buying, you will most likely get stopped out before the market reverses. Okay, so for your take profit, it will be for take profit, very simple. Take profit target before a key FIB confluence area, because when price reaches the Fibonacci area, there's a high chance that you will not be able to go beyond it, and instead of reaching your profit target, it reverses back to even worse, your stop loss. Okay, so let me just go through with you guys. The charting itself. Okay, give me a second. Let me shift this out of the way. Okay, so what are we looking at? Let me look at this chart right here. All right, you can see price has already broken this 23.6% fib retracement. Okay, then price could come down to a level. Let me try and draw it. Give me a second. I cannot adjust this. Okay. Right. So we have a very nice shade over here. All right. So we can see previously price reacted off this 78.6% fib retracement and 78.6% fib projection, right? Not sure if you guys can see this. We just filter this out. Okay. Yeah, so you can see right here, once price comes back down again, right, I'm very inclined to buy. Okay, because buying off this area will be a good area since there is fib confluence here, the 78.6 fib retracement and 78.6 fib projection. Okay, so let me see right about just now. Let me see. We don't have. Hold on, guys. Let me. All right. So just now, okay. So right now, you can see we have the 61.8% fib projection and 78.6 fib retracement right here at the same level. So that's why I was inclined to take a buy at this block of rectangular area over here. And then I was taking a buy. All right, did a quick 1.5% in a couple of minutes because there was G30 was moving really fast. Okay, so this for G30 right here. If I were to enter a buy trade here, right? Okay. Yep, so this area, we also have the 100% fib projection over here, which shows that at this swing low, which shows that this swing low is pretty significant and you shouldn't take it too lightly, because with the combination of these factors, right, it shows that there is fib confluence here. All right, then you can actually take a position right where you feel that it's gonna go up. Okay, so for US 500, it's very, very simple. Very, very simple. Basically, price will come down to this 38.2% level and then go up. All right. And then your second support will be your 61.8% retracement level. And then you're buying the pullback as well. So this is one pullback level. This is another pullback level. Okay, so right, you can see right here that if price came down, right, retrace at least 50%. Okay. All right. Let's see this. Okay. All right. So let's move on. EURGPY. EURGPY. So Euro Pound Dollar. So this is very simple. Basically, that we have our 78.6% level, right? Along with this multi-swing high resistance level. Okay, then we also have the requirement whereby price needs to retrace at least 50%, right? So that's why we can see price is trying to reject this area and come down. Okay. Then lastly, we have this retracement levels, and then we have our 61.8% fib projection going on. Okay, so yeah. Okay, there's a possibility that price may react off this movement because you are not able to take maybe on the 1 hour time frame, you are able to do your do a good one right here. Okay, but then you can see that if let's say you wouldn't want to draw from this area, these highs, and then all the way down here because price will be cutting through, right? So the less cut, the better. Okay. All right. Let me see. All right. So let me just find maybe a couple more example. Then in like maybe 10 more minutes, then we can end the webinar. Okay. So just bear with me for a little bit more. I know it may be slightly confusing. If you guys have any questions, just type it in the questions box, okay? So that I will know what to go through with you guys. Okay, so let's just take a minute to think about anything that you want to ask so that I can answer it as well, because usually sometimes people have a lot of misconception on Fibo, and sometimes Fibo, the price has already closed, right? So for example, right here, we can see that price broke past, right? Supposedly going to form a head and shoulder pattern, but it broke through and went even higher. Okay, so that is something that you guys should take note of. All right. You guys have any pairs that you want me to go through with you? Feel free to send it in the Q&A box. Okay, so I'll be able to get to them. Okay, if you guys have no questions, then let me just move on. All right. Okay. Let me see where else I can show you guys. All right, so for here, let's say you are GBP, right? What we are expecting would be, right, price has already retraced 50%. Okay, so you shouldn't have to use, I think price is now reacting to 61.8. Yep, price is reacting to 61.8% flip retracement. Okay, this one should also be 61. All right, so what we're looking at for EUR GBP, ideally, for it to come down, right? Worst case scenario, right? You can see right here, the first support level, we have this negative 27.2% expansion level, right? Okay, so if let's say price does this, right? So once it completes this move, let's say price is here, then you can use your projection to see where price can go. So this high, this low, and this high. Okay, so if you have this tool right here, you can easily find something which is the 78.6% Fibo projection level. Okay, so once you have this, then you will be able to see where price could lead up to. Okay, so from here, same thing. Let's see, zigzag. Zigzag, right? Okay, so we will draw from this low. Oops. Okay, but yep, you can see right here that maybe this swing low is the one that is closest to this negative 27.2 expansion level, okay? But try not to squeeze your key levels onto your fib levels, because if you try to squeeze, right, then it will not be as effective, because your key levels should always come first. Your graphical key levels should always come first, and then followed by your fib retracement levels. Okay, so this is just something that you guys can take note of. Okay, so what else can I cover with you guys? Let me see. Okay, so far, is everything okay? You guys have any questions? No questions? Okay. Because it may be if there's no question, I would maybe assume that everything is okay. And then if you guys are unclear of any explanation that I went through with you, just feel free to voice out and then let me know, and I can address it to you guys, okay? Because if not, um I would assume that you guys understand, right? So if you guys understand, maybe I can get a reaction. So like a thumbs up or type it down is fine too. Don't have to be shy because it's just us. Okay. Okay. All right. Let's see, 4 hours. Okay. Yep. So for example, right, sometimes when you're drawing feed retracement levels, sometimes it's okay if price maybe cut through a little bit, because on you should refer to the daily, right? If the daily shows that is a very nice movement, right, then you can draw it on the daily. You draw on the daily and then you can come to the H4 to see if it's okay. Means price, it doesn't deviate like maybe too much here, then come down, cutting through, etc. Okay, so sometimes cutting through a little bit is fine, but not too much. Okay, so this is something that you guys can take note of also. All right, then next, what else can I cover with you? Okay, so sometimes you may be able to see projections, like for example here, here, and here. Bigger projections are always easier to see rather than the smaller ones. So let's take maybe Bitcoin as an example. Okay, sometimes you may not be able to see such movements. So uh let's see. Okay, sometimes rarely, but sometimes if I can't really see, I will use the line chart and then I'll pick these lows right here. Okay, and then I will draw to the highs over here and then to the lows. Okay, just to make sure that I'm not missing out the peaks, because on the line chart you can see that these are the max of the candlestick, right? Right, these areas. So you can see very nicely, right? If I use the freehand tool and draw right here, right here, and right here, right? And then it will line up very nicely with the body of the candle. Okay, so this is something that you guys maybe could use. Okay, let's see what else I can share with you guys. Okay, so just remember that your expansion levels, your negative 27.2% is the strongest is the stronger one compared to the negative 61.8. And also for the extension levels, the 127.2% extension level is stronger than the 161.8 extension level. Okay, and your 61.8% for your feed retracement level is your golden ratio. So usually price tend to react a lot more there compared to other levels. Sometimes for example, your 23.6% level is pretty weak, so sometimes I don't really rely on the 23.6% level. Okay, but more often it reacts to the 61.8 and 78.6. Okay, for the 50% is more or less it works pretty well also, but it works on maybe, let's say, pullback supports, so pullback support levels. So that's what I noticed. Okay, so yes, let me see. Yeah. Uh, Yep. So this area is what I'm looking at for just an example, because we have Fibonacci confluence here. We have our 78.6% retracement level and 61.8% projection level, and then we are looking to buy this move upwards. Okay, so this is so you don't have to be afraid, you just have to be brave, and then you can be able to find optimal entries right here. Okay, all right, so yes, that's all for today's session, and I hope you guys actually learned something new and are able to understand retracements, projections, expansions, and extensions. Okay, so this is a whole crash course on Fibonacci itself, and I hope you guys are able to use it properly and use it well, so that you won't be able to find it misleading or whatnot. Okay, so thank you guys for tuning in to today's webinar, and I hope you guys have learned something new if you haven't. Okay, so thank you for being attentive, and I appreciate your time for listening to my webinar for today. Okay, so that's all I have for you guys. All right, take care, and I'll see you guys in the next webinar. Bye bye.